Are you ready to overcome the complexities and burdens that come with your success? Join the team at Centura Wealth Advisory in the Live Life Liberated podcast. Now, on to the show.
Hello and welcome to Live Life Liberated with the team from Centura Wealth Advisory. Today, Derek Myron is in the hot seat and he has another guest in the studio. It's another Eric. Derek, who'd you bring in today?
I brought in Eric Northbrook here. Welcome, Eric.
Welcome. Thanks for having me.
Yeah, absolutely. So Eric Northbrook is the executive managing director and partner at Voit Real Estate. And all the things that are going on with inflation and San Diego real estate, I thought, wow, this is a good time to bring Eric on the show.
Yeah, things are changing. Things are changing quickly. And it's interesting times out there.
Yeah. Well, I'm excited to get to it. The audience of, I always like to tell people, who is this most important for? I think it's high net worth individuals and businesses seeking knowledge around commercial real estate here in San Diego and beyond, and their professional advisors and those who serve those clients. So I think that's the appropriate audience for today. So Eric, why don't we just get right into your background and tell us about you and tell us about Voit.
Well, I'm a 33-year commercial real estate expert, I guess. I'll classify myself as that after 33 years. I think I can say that.
You've earned it.
And broker for 27 years. I didn't get a W-2 till I was 47, and then that's when I took over the leadership role for Voit Real Estate Services here in San Diego and the region.
Great. How long ago was that?
Coming up on 8 years. It'll be 8 years in June. So it's been a lot of fun.
Has that been a good transition?
It's been a great transition. I think that my wheelhouse is mentoring and coaching. Yeah. And so I've raised up a lot of guys right out of college, and they've starting to be successful, buying houses, getting married. So that's always fun to see.
Really cool. Really cool. But you also raised your family here as well.
I did. My kids were essentially raised in one house in Encinitas, and longtime resident. I moved out here from college a week after I graduated from Arizona State. I beelined straight to San Diego and never looked back.
Not a bad place to be, especially in the commercial real estate business.
That's correct. It's been very fruitful. I'm very, very grateful, and had a lot of good team members and a lot of people that have helped me be successful. So I'm very appreciative of all those people.
Of course. Well, tell me about Voit and what makes Voit different. What is that? How do you differentiate Voit from the competition?
Voit Real Estate Services, we really play in the family office and private client world. We don't battle for the institutional business like the big boys, but we stay super focused on what we're doing. And the big differentiator is we've been in the game. We've owned real estate. We've signed on the loans. We've had tenants vacate the premises without paying rent. All those stressful things. And we really encourage ownership within our company. And so that's a huge differentiator. But the other differentiator in our company, it's all about the people. We're 6 offices in Southern California, San Diego, Irvine, Anaheim, Inland Empire, and LA. And so about 140 agents. And we own the company. We bought the company from Bob Voit in the fall of 2015. And we pay a handsome dividend. At the end of the year, we push out 100% of our profits. We have a nice nest egg, and it's very rewarding. So at the end of the day, the brokers, have a real chance to achieve. But also, most importantly, our clients are being served in a professional manner and the most ethical manner that is expected.
Okay. Well, tell us about San Diego real estate. You run the San Diego office. What's the head count there?
I have 48 agents.
Okay. And of those 48 agents, what are the markets that they're in commercial real estate here in San Diego?
So we cover industrial. We're heavy in industrial. We cover office, retail, and multifamily. So we have all those food groups, and we also have a debt platform.
Okay. So let's start with multifamily. The COVID's actually done okay for multifamily.
The multifamily market is, I'm fortunate enough to own some apartments in North Park that I bought 4 years ago, paid $210 a door for them, and they're probably worth $410 a door. Rents just keep ratcheting up, and there's no place for these people to go. And so unfortunately they're gonna have to just hunker down. And as multifamily, it's super hard to find anything right now, in my opinion. It's just, I got sticker shock personally, seeing things trade for $450 a door
Here in San Diego. Well, the two main variables, right, are what happens with cap rates. It looks like that's supposed to start going the other way with what's going on with inflation, but we potentially have this war over there and what's going on in Ukraine, so maybe they're going to sit on their hands for a while. Who knows? So that's one variable, what happens with cap rates. The other variable is what happens with wages. And if wages continue to go up, well, you're probably going to be able to charge higher rents. And what do you forecast for multifamily here over this coming next year?
There's a tremendous amount of new product coming out on the market.
Here in San Diego,
but it's more on the Class A end. Yep. And so those tenants that are seeking, B minus real estate, I mean, they're not building any more land for that kind of real estate. And so rents are going to keep going up.
Yep. As long as wages continue to go up, you think it'll even, as far as price, do you think it'll modulate some, or do you think it's still going to?
I think it's still going to go. I mean, cap rates are still kind of a rudimentary way of looking at things. I think that, rents are just going to push through that.
Yep. Yeah. So that variable is stronger than the interest rate increases likely.
100%.
Let's talk about office. Everywhere in the country, office is on sale. Not here in San Diego.
Office, it depends on which market sectors we're talking about, right? So, if you look at downtown's got a 30% vacancy with sublease space. And there's a lot of corporate tenants down there. There's a lot of law firms down there that, it's wide open at sea of cubes, and then nobody's occupying office space, law firm space right now. But as far as, you got Irvine Company that owns 45% of UTC and another 25% of the downtown market. And so they're really in control, and they're not dropping their rates. They're holding firm on their rates. There's increases. They will not do an increase less than 4.5% per annum. And so, they're the 100-pound gorilla that can really dictate what the office market's doing. And right now, San Diego's a small office market. 5,000 square feet and less is the average size of tenants. And Irvine Company's building out spec. Every one of their suites, 5,000 square feet and under. And so they have a long-term approach, and you can get there are some opportunities out there, but you have to hunt, and it depends market to market. But for the most part, downtown is the biggest opportunity as far as, quote, vacancy.
Yeah. They're hurting downtown, but when you come from UTC and up into North County, good golly, is it true Irvine Company took 4, 5, 6 buildings off the market to say, hey, we're going to improve them to try to take down some inventory and make things tighter? And then the second side of that is the biotechs buying up building and putting in what?
Well, the life science market has just been crazy. You got 6 million square feet of future development in Sereno Mesa, another 4 million square feet in UTC of future development. Torrey Pines is only 7.5 million square feet. So they're building out an entire new Torrey Pines in the next probably 3-4 years. And somebody's going to get, in my opinion, somebody's going to get left holding the bag. I just don't see all this demand.
So what's driving all the why is so much money pouring in here in biotech space? Why is that?
Venture capital.
Yeah.
Man, venture capital is chasing, the COVID world has just, the life science market just caught fire because of COVID. And so the venture capital money, so long as the venture capital money keeps rolling in San Diego, we'll continue to see, some good absorption from life science. But it's really displaced in Sorrento Mesa. The other dichotomy is it's displaced about 2 million square feet of office.
Yeah,
office space is being purchased by the Alexandrias of the world, and they're taking it down, and taking it down to the ground, displacing all the tenants, and they're going to go vertical.
So for your office clients in North County, what's your advice to them today?
Every tenant's different, and they all have different goals. But if you're a tenant out there, you got to really look at the leadership and the culture that you want to set, right? So I do have a number of clients that are gone virtual. But if you want to stay in office space and your goal is to stay in certain submarkets, i.e. Del Mar Heights, you're going to pay up because it's still the strongest submarket in San Diego County. You're starting to see rates push 5s, So, but if you're looking for opportunity, I think Carlsbad's got some good buildings. They got some really nice buildings up there. You have some developers up there that have purchased property and repositioned them, and you can lease space in that $250 to $275 range. So it's it all depends.
Yeah, guess it matters on your traffic pattern, where your employees live, and how far they got to go.
Correct.
So let's talk about so the office kind of mixed bag. Right here where we're at in Del Mar, tight as all get out. And numbers over from 2020 are up how much? We're from 2020 lease rates in office in this area to today.
2020 to today, probably 15%.
Yeah, during COVID. Office across the country has gone down in value. But it all depends on what you're reading. And who that audience is, supposed to be for. You're still gonna have office is gonna come back, in my opinion. I'm gonna be the contrarian here. There's too much going on when you're in person with people. You got to have the collaboration. You got to see people. You got to see people's expressions. And it's hard to do that on Zoom. 100%. I think people are getting burned out on Zoom. They want to get back face-to-face. But, well, let's pivot. Let's go to industrial. What's going on in industrial? A couple of our clients have sold. Good gosh.
Industrial owner-user buildings, and I'll classify owner-user buildings 25,000 square feet and less. That's really the meat and potatoes of the owner-user market. We're pushing $300 a foot, $350. It's interest rates are still historically low, and the SBA has got a lot of money they're trying to push out. And the big difference now, though, going forward with the SBA is SBA used to roll in your improvements, and you can't do that anymore. They're just, if you want to get improvements in your building, you got to figure out another way to do it.
How come they decide to go away from that?
It's just they've had some challenges with just how much money actually goes back into the building. Are they putting all the money into the building? So it's really a check and balances.
You bring up the SBA. We have a lot of clients who have SBA loans, owner occupier, and then they go sell their business. And they've forgotten that when they had that loan 2 years, 5 years, 10 years ago, whenever they got it, that, gosh, they had to be the occupier of that business. Even though that business still occupies that place, they're no longer the owner. They got to pay off that loan. So
Not necessarily.
okay, let's hear that.
Not necessarily.
We had several.
Just because you vacate the building
Mm-hmm.
and you had an SBA loan doesn't mean you have to sell the SBA loan. You can still have a tenant in there, have your SBA loan. No, there's no SBA police out there checking. So, that's reality.
Yeah.
So, I mean, we have a number of people that have bought buildings, got an SBA loan, sold their business, sold their company, and continue to own and operate the real estate. I would, my advice to anybody out there, do not sell your real estate unless there's absolutely some reason to do that.
So I wasn't advocating that they had to sell the real estate, but they had the loan covenant, and then annually they're getting a document from the SBA to tell them that they had to mark, do they still own or occupy 51% of that building? So we've had to have several that had to figure out how to refinance that building to take out that SBA loan. So love to hear more about how you potentially navigate that.
We can talk further about that.
Okay. So what are you advertising? What are you recommending for those clients that are looking for space in North County? Yeah, in the industrial market.
I mean, true warehouse distribution space, they can't build it fast enough. I mean, and I'm talking tenants, 50, 100, 200,000 square feet. There's nowhere to go. And the Amazon effect is real. Amazon has about 3.5 million square feet just in OTI, and taking on more. I leased 10 years ago, I leased a building, 200,000 square feet down in Otay Mesa for more furniture. We leased it for 30 cents gross. That same building today is now $1.25 triple net. So
10 years.
In 10 years, it's just...
And you attribute that to Amazon?
Oh,
taking up so much.
Amazon taking not only space there, taking space in Kearney, taking space in all over North County. I mean, it's kind of like the life science does for office. Amazon is the same for industrial, and it's just pushing people to other markets, and even looking up in the Inland Empire. There's just no opportunity. There's no inventory.
Yeah. So what do you think is going to change? I mean, it can't stay like this. Last year, you guys had an absolute banner year. I mean, best year ever, yeah?
Yeah, we're up 20% year over year already.
Wow. So what do you think is going to change? I mean,
how long is the war going to go on? How high is oil going to go? We're $1.25. $1.20 or $125 a barrel today.
Yeah.
So, those two things, inflation, interest rates, will it slow it down? Sure. Is it going to be a noticeable slowdown? I'm not convinced. Wow. There's just too many positive things going on out there.
Yeah. Considering all the money we spent.
Exactly.
Yeah.
Or gave away.
Yeah. Well, if you have investors looking for space and looking for opportunistic investors looking for Southern California real estate, where do you think the opportunity is other than off downtown office?
I still think there's some opportunity in multifamily. You have to hunt a little bit harder, and you have to be ready to pull the trigger day one. I mean, you might have to put up non-refundable money day one in order to get in first position. And those are value add, reposition.
What size units are you talking about? How many doors?
Anywhere from 25 to maybe 450.
Okay.
I mean, it's hard to play if you get above 10 million. Now you're playing in the institutional world. So you really need to stay below 10 million if you're a private investor, and you better be prepared to come all cash. And I think, if there's a way to buy a small little industrial building here and there, even if you have to pay $300 a foot for it, I don't think that's a bad. I don't think long term that's a bad investment.
Well, where are you with inventories today? Where are the inventories for multifamily industrial here in San Diego County? All time lows?
Yeah. I mean, you're looking at industrial, we're sub 3%. Office, going back to office, we're, roughly 12, 13% countywide. And multifamily is, hey man, I wouldn't even guess 2% at most.
Yeah.
And so, but the opportunities are really going to be, you're going to have to look in the outlier areas. You're going to have to look in East County. You're going to have to look at Vista. I think Oceanside's got a lot of momentum. If you've gone downtown, Oceanside down by the pier, it's just
really gentrifying down there.
I mean, apartments, hotels, really nice product. So it's, I think if you look hard, there's probably some opportunity in North County for sure.
San Diego just really has weathered this pandemic a lot better than most. And can't put my finger on exactly what all the reasons were that is the case. Maybe you can shed some light on that.
Well, number one, people in San Francisco have figured out that it's, we've been a benefactor of COVID, right? So all these, everybody that has lived in San Francisco has figured out, man, quality of life is way better in San Diego. And for the most part, real estate's pretty cheap compared to Northern California. So we've definitely been a benefactor of that. We had a lot of people move in, and this is arguably God's backyard. So I like to think that people, there's obviously a sunshine tax.
Sunshine and the beaches sell the place.
That's exactly right.
Yeah. All right. Well, listen, we're at the end of our time. Why don't you, do you have a final thought on what you ought to share with our listening audience?
Be patient. From an investment standpoint, just be patient. You will find something if you're working with the right people and you're working with the right team. Just be patient, and there are opportunities here, but they are few and far between, and be ready to pull the trigger when you do find something.
Eric, thank you for carving off time to be with us in your busy schedule. And Eric, the host, thank you for hosting us today.
My pleasure, Eric. Thank you so much. I could use some of that sunshine you're talking about, maybe some beaches too, because it sounds fantastic. So, guys, thank you so much for sharing everything that you did with the audience today. Derek, is there anything that the audience needs to know about maybe contacting you, reaching out, chat about this kind of stuff?
Yeah, absolutely. You can reach me at dmyron@centurawealth.com, dmyron@centurawealth.com. And if you want to get in contact with Eric, just put that in your email, and I'll get it right over to Eric to have him get in contact with you.
That's fantastic. Derek, thank you so much. And of course, Eric, thank you again for being here. And our last thank you goes to you, the listening audience. Thank you so much for tuning in and listening to the Live Life Liberated podcast with the team from Centura Wealth Advisory. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when they come out with a new podcast, it'll show up directly on your listening device. This makes it really easy to share these podcasts with your friends and family. Again, thank you so much for listening today. For everyone at Centura Wealth Advisory, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
Thank you for listening to the Live Life Liberated podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Centura Wealth Advisory. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Centura Wealth Advisory. Centura is an SEC registered investment advisor with its principal place of business in San Diego, California. Centura and its representatives are in compliance with the current registration and notice filing requirements imposed on SEC registered investment advisors, in which Centura maintains clients. Centura may only transact business in those states in which it is notice filed or qualifies for an exemption or exclusion from notice filing requirements. Past performance is no guarantee of future results. Tax relief varies based on client circumstances, and all clients do not achieve the same results.